Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today we walked in and pretty much didn't know what to expect. Futures were down about 11 to 13 handles after closing strong the day before. Lots of mixed signals, and they continue. But there's also a lot of mixed signals around the world. We don't know what's going on in Washington, whether or not the government shutdown is going to be 2 more days, 10 more days, go all the way to the debt ceiling. Now their media is talking about how it could be a catastrophe if it doesn't get lifted, and it could happen, it couldn't happen, this, that. So it basically has everyone on edge and just maybe doing a little bit less. So with that said, a lot of us had some longs based on the fact that it seemed as if we somewhat priced in the move or the government shutdown. And then today you had a few things you had to do. Okay, I came in with I think 5 or 6 longs and 1 short. And the strategy is what do you do when futures are down and you have some longs and you're looking to either make cash flow or salvage a trade, or if you come in flat, what do you look at? So rule is you always go after the first, or the first things you go after are the strongest stocks from the prior day that closed in their highs. And if those are the stocks that you take home overnight looking for multi-day trades, typically you can get out of them because it's the right trade. There's money there. Sometimes there's volume there. So if you went home long them, sometimes you could buy a little bit versus the first 30-minute low. So you're adding to your position, getting a good average price. And then sometimes you could add to it going through the prior day's high for that momentum trade. And then it goes higher, and then you trim and trail it, you take some off, and you maneuver your positions. Sometimes it opens down, tries to rally a little bit, gets weak, and then breaks that low and doesn't let you salvage a trade, which that could happen also. So there's a lot of little things that could happen. So if you take a quick look first before we get into that of the S&P, you'll see overall still this trend is still strong. We've been following it all the way from November. Take away all the noise, all the doomsdayers, still very, very strong. Within this trend, you had the breakout failure in May on the May 22nd, led to about a 5% decline. Then you had this small breakout failure combined with this head and shoulders top, which gave you a move back to the trend line. Then we reclaimed it with this descending channel, and then into the Fed, you had this last push-through failure, which has led to a lethargic type of correction, probably about 3% off the highs. So, at this particular point, if you want to take a real close look, which we like to do, you'll see that we are trying to hold this area. So we're building somewhat of a floor right above this, what is this? This is like 1680, this is 1674, and then you also have a resistance now. You have this somewhat of a downtrend that we're not going to probably be able to clear until we get some kind of clarity or some kind of resolution. But within this, there's definitely some spots to be. So before I go into the strong stocks, think to yourself yesterday what closed near the highs of the day. And we went over a lot of them in the morning call. We also went over a lot of them in the morning note. So with that being said, just off the top of my head, you had Amazon that went out at the highs of the day. You had Priceline go out at the highs of the day. Google go out at the highs of the day. Apple go out at the highs of the day. You had Netflix go out at the highs of the day. You had, in its strong tape, what else went out at the highs of the day? Some of those Chinese names, Sina, Youku, and a lot of others. So if you chose those as your vehicles, I think most of them went positive and you could have salvaged a trade. So first things first, let's just go with Apple. Apple, to me is still building a very nice lower level pattern. Okay, here's this, base down here. This is the first trade when it triggered after holding the earnings gap and continued. Didn't have enough juice here to really get through this trend line. Remember, we got stopped out right there, trade changed, and now it's regrouped. Took a look, a little look at it closer yesterday, and it got a nice trade when it triggered above this 481, which we talked about. And then today it opened down, and you could have had actually, if you came in flat Apple, there was a great day trade, and if you came in long it, you had a spot to add versus the low, and you also had a spot to add through yesterday's high, which it wound up trading off, but nice trade here. So with that said, sometimes, when you're looking at these stocks, you have to look for that divergence. And people are like, what's a divergence? It's when the futures go low and your stock acts better, and that gives you clues that something changed incrementally in the morning, so that's when you add to your position. So I'm just going to show a quick 5-minute chart on Apple, because I had this up, and a lot of us were talking about it as it transpired. So if you go here, okay, and look at the 5-minute chart, let me take off the West Coast and the time, go East Coast. So here is this was yesterday's high, and this is the gap down. All right, from this gap down, it was interesting because at first it tried to go up and failed. So I know I bought a little bit more right there, and I got out of that a little bit more, but stayed with it. Okay, and then as the futures went to make new lows, okay, what happened here is Apple held its low, okay, which was about 484, which we did talk about. I said if Apple holds 484, I think that it'll make life easy for us. And where I get 484 was from the prior day, okay, prior breakout from the afternoon, which you could see from the prior day was right around here. So this was level 1 support for me, and level 2 support was when it broke above here. So in my head, I had this mapped out, level 1, level 2, and and this was a little bit lower down. So now go back to what you could have seen on a bar by bar basis. Okay, here is the choppiness, and then here's a 10 o'clock, and then look at this wide range engulfing bar. This bar put it back on the map, and a lot of other things didn't turn yet. Okay, let's see if I go to the spiders here. Let's see where the lows came in there. Spiders, the low actually came in a little bit later than 10 o'clock. This was the gap down, went sideways, boom, and then in this time period, I think the low came in on, I don't know, what was the low here? The time frame there, not to be exact, that was 10:15, right? If you go back to Apple, this bar is 10:10. So, it already came off the lows when you saw the spiders still hitting that area. So, you have to notice these little things, and the active trader's eye is trained for that. But anyway, if you miss this, okay, because that happened quick and you saw this quick move, your next step was right here when it digested and flagged at the upper end of this range in front of old resistance. You had that, and then you had yesterday's high. So if you happen to have even if you got out here, this put it back on the map for you to get back with it. And if you didn't add and you were waiting and you were going to give it to 41.50, which was really the price to give it to, if you missed this add, here was your add, here was another add through the high, and then you could have sold some into strength. Okay, and then basically it really did nothing for the rest of the day as the market rallied. It let things play catch up, and then it closed pretty lethargic. But overall, this little divergence here gave you a clue to, if you are not in anything, look at Apple, look at the relative strength, try and get yourself a nice cash flow trade. And if you were in it, here was your spot to average down, add in, add for momentum, sell some, get comfortable, and get back to your swing position. And if you're back in your swing position, as of now, still looks pretty good. Okay, here's the next big level there. That is 496.91, and if it gets above that, I do think that it's worth staying with. So that's a little bit of a tactical session or education for you that goes on in a more incremental way for active traders. And as far as Amazon's concerned, Amazon was down a few bucks, went positive, pushed through 2013 highs, gave everybody a way out if you took it home long, and then really did nothing for the rest of the day. So you had to figure out what you wanted to do there. And overall, Amazon's still best in breed. Okay, right? This is near 2013 highs. There's not a lot of stocks like that. Here is when, broke out, came back, retested, descending little trend line here. Okay, here is that flag, boom, held the prior highs. And then even today, in the midst of everything, even though it was somewhat frustrating for some, it's still, it opened lower and then traded briefly through 321. It didn't go very far. It went to 321.73, but at least you had a way out if you were just taking it for a day and a half trade. And if you're still swinging it, no reason to be so worried. Okay, but hopefully you have a little less up here. Because what could have happened is, some people didn't take it when it did that, because look at something like Netflix, which was also at 2013 highs. It went through yesterday's high at opening lower and gave you some nice follow through. And if you look here at Netflix, you'll see that it not only opened lower where you could have bought it down, it traded through the prior high and actually gave you a little follow through. Okay, it triggered yesterday, followed the 8th day. If you took this home long because it closed at 2013 highs, you had a chance to buy it a little bit lower, and then when it went through 324.70, and you had another trade there. If you came in flat Netflix without it because you don't take overnight risk, this is something you look at because it closed on the highs the prior day, and then there you go. Boom, Netflix. That one was easier. And it's funny because people on the floor, get a little upset. If you can't take home everything, right? So some people who took home Netflix and Amazon and maybe sold Netflix when it went positive and held Amazon, and Amazon didn't have the follow-through. Say, oh, why did I sell Netflix? And I held the Amazon, and that's just the trials and tribulations of being a trader. It happens. As far as Google stopped me out because my level on Google, which Google seems to have my number because maybe they know I search sometimes with Yahoo. No, it doesn't. But this chart pattern still looks really good. And unfortunately, I don't have any overnight. In my head, okay, remember I got in it the prior day right here, and we had a nice little trade once it cleared this 881. In my head, I figured, okay, I'm going to give it to the prior day's low, which I was too tight, 880.05. And it also showed relative weakness in the morning. But what did it do? It pushed below, went to 877, got me out, and then came back above it and closed strong. So for me, I messed it up. Maybe I had too many things going on. I just wanted to limit some risk, blah, blah, blah. There you go. Still looks okay. I do still think that this is a candidate to take out this at some point, to maybe take out this 906. And then at that point, everyone's going to be talking about how we're a pebble throw away from 927, and this could be your next, $1,000 price target or $1,000 stock. It might take earnings, it might not. It might take, just a better market if we get some kind of resolution, because earnings aren't for a while. Priceline has proved that you can kiss 1,000, and not only kiss it, you could dance around with it. And this traded through, opened up a little bit lower, and gave another 40 bucks. This has been a really, really strong trend, and goes to show you that you do not short based on valuations. You short based on broken trends and poor price action, which Priceline has not had. So with that said, yesterday we talked about coming into a new quarter, how potentially some things could change a little bit of their complexion because the vested interests that potentially marked them up for percentage reasons or whatever the reasons are might not be that vested anymore. So something like Tesla that's been on a tear, very extended, huge move, with Facebook basically. Finally, yesterday, it was a little wishy-washy, but they held it in there. Then today it got downgraded, and then there was a car on the internet burning that looked like a Tesla, which it probably was, and it was basically due. So, we'll see what happens tomorrow. I know guys on the floor actually made money short this. Congratulations, I did not. Here is the trend that's been intact for a very long time, okay? Here's that 21-day, which has been following. There was one ascending channel, which was right there, that got broken to the downside with that Goldman call that was worth 80 bucks, and then only to be engulfed by the Red Dog reversal, and then you saw commitment, and then it continued. So now, lo and behold, here we are after a really nice move we had, prior in September, to another ascending channel, which are always great when they're being followed, but once they get breached, you have to get out of the way. And we talked about if, we get below yesterday's low, be careful. And some people not only was careful, they got short. Good for them. Good job there. But what did it do? First time there. It held the 21-day. And on Twitter, I said, if you're shorted, look to maybe cover between 174 and 177. Reason being, this was your prior breakout, and then there's a 21-day. Some actually played a little tactical bounce, and you made some shekels there. Now the question is, we'll look at it tomorrow to see what happens. We'll see if it dances around today's low tomorrow, 175.40. Does it hold it and then resume? If it does, it's going to have to take back more than half of today's move. Or does it go below it and then figure out if this trend holds or if something truly changes? But for right now, it was just worth being aware of because of the new quarter. And then, once it traded below 2-day prior lows and showed relative weakness, which it did all day, that's a sign to either get out of somewhere if you're long and look for a cute short. And then here was a zone that it tested the first time, which it's been holding all the way back from July, which was the Goldman downgrade. It only went below it once, and that was for a day. So it quickly reclaimed it because then you go all the way back to 2 quarters ago, and that's May you're talking. So this trend is, I'd say, in a little bit of jeopardy, and that's a very little bit. We'll see what happens in the next few sessions. Should be an opportunity and on your focus. Facebook hanging around. People like put Tesla and Facebook together because they were so strong, and I guess you can put them together somewhat, but obviously 2 different businesses, 2 different companies, totally 2 different things. The only thing constant is that this one actually held the 8-day the entire way up, hasn't even tested the 21-day, gave you that one down day that got engulfed. So if you did get short here and think the party was over, this told you, nope, music's still playing. Then it went above it, and now it's it's a little wishy-washy up here, but overall still flagging. So the question is, will this high-level flag yield another move to the upside or a bit of a retracement? So I think that's what traders are going to be watching for, and it's very tricky because when it looks good lately, it's been a sell. When it looks bad, it's people trying to short it. It's been a buy. So we'll see what happens. I would say below this area, perhaps you get a cute short down to to this, but who knows? It's still flagging, and if it goes above 51.10, it's in the game for another move. But so this trend is still in there, and don't just short this because Tesla broke its and they happen to move together during the course of most of the last few months. As far as the banks, still lethargic. As far as the home builders, kind of interesting here, showing a little bit of commitment. We talked about this, this downtrend that got resolved sort of to the upside right here, and it's holding it. So I'm in some of this, and I'm thinking maybe, if we're going to rally, it can get going above 31-ish, perhaps it gets on the move. This was one buy area, another one, and now it's holding, so we'll see. The overall banks, though, trying to hang in there, but very lethargic, and anytime you try and buy it, it's been tough. This is sort of in check, but this is the first thing that if this starts getting below this pivot low here, you'll probably see more pressure on the market, and then you don't have support all the way down to here. So with all that said, we came in today, you had your tactics, you had your plan, what was going to go positive, where things going to go positive and get momentum, where things just worthy of being salvaged, can you continue to sit? Is this 1674 to 1680 area going to hold? What's going on? There's just so much going on. So if all of it's kind of driving you nuts, do what a lot of smart people out there say. Low gross, low net in times like this. Kind of be just on your toes if there is opportunity and you could grab it, and just expect a little less, and if something develops, hopefully you're on top of it. And if you're a macro investor, just tune out the noise. You lived through 1987, you lived through 2001, through 90, through 2007 and 8, and you're going to live through what's going on right now, and keep to the process and the plan. So with all that said, I'll see you tomorrow morning. Tomorrow is Thursday. Have a great night. Scott Relli, T3 Live. This is your recap.